Okay, good evening, everyone, and welcome to today's webinar, Controller to FP&A, brought to you by FP&A Professionals Institute. Over the next 60 to 70 minutes, we'll talk about the differences in the controller world. We'll also talk about how the FP&A world looks like, what are the differences between the controller's responsibilities and FP&A responsibilities, and how FP&A is evolving to be the new hot profile out there, and why, if you're aiming for a CFO role, a good combination of both controllership and FP&A is important for you. So we'll touch upon all those aspects. I'll also give you, rather try to give you a good taste of how is it like to work in FP&A. So we'll look at a couple of practical examples. One example on budgeting, one example on management reports, so that we get a good taste of how is it like to work in FP&A. And then finally, we'll talk about how can you transition from your non-FP&A role, like an audit or an accounts or a tax, into FP&A. Right? So we look at some tips and techniques on how do you want to transition from accounting or tax roles to your FP&A roles as well. Okay. So all in all, it's going to be a next exciting 60 minutes. So get rid of all the distractions, get rid of all your mobile phones and everything. If you can, then try and be on camera. So I've seen that if you're on camera, then the distractions is a little bit lesser, and we'll try and cover as much ground as possible. I'm going to be a little bit fast. A section of it is going to be interactive, where I want you to type your responses in the chat box. And then finally, we will stop in the end for some Q&A as well. Okay. So let's get started. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed a 1-year general management program from IIM Ahmedabad. Over the last close to 2 decades, I've worked as a CFO in India and in the Middle East. I'm now the co-founder and lead faculty at FP&A Professionals Institute. I've been an active instructor over the last 6 years, and I've trained probably thousands of hours of Zoom trainings right now, and I've trained more than 5,000 professionals on various topics like FP&A, finance business partnering, data storytelling, one-to-one CFO career coaching, and much more. You will frequently see me as a speaker or a moderator in events across the Middle East. I've also been able to build a vibrant community of more than 200 CFOs across the Middle East. And I end up meeting roughly half a dozen CFOs every week, one-on-one, to understand where they are, what are they looking for. And in that sense, I'm able to bring all those insights into my career coaching and my training programs as well. My co-founder, Asif Masani, very popular on LinkedIn, so you might have seen him. Again, he has close to 2 decades of experience, worked with large multinational brands, a celebrated author with 3 to 4 books to his name. I think he just released his 4th book last month. So go check out all these books, really helpful in terms of your FP&A roles. We both started the journey sometime at the end of 2023. So that's when we launched our courses. And then over the last 3 years, we have been able to train more than 6,000 students on various programs that you see on the screen. Our flagship program being the Certified Global FP&A program, or the CGFPA program, which is our advanced 6-month course, which is highly practical with 25 plus case studies, 50 plus examples, and all the important tools, both on data analytics and on the AI front. CGFPA is our most advanced program so far. So if you are interested, do check out the next batch is starting on 12th of September, 2026. Okay. So with that context, let's get into today's section. So I want to spend some time on understanding where does FP&A fit into the CFO's office, and also give you some differences between the CFO's, the controllership office, and the FP&A's role. And then we will transition into understanding what a budgeting is. We'll also look at a practical example and also a couple of management reports, and then we'll talk about your FP&A career in general. So if you can try and visualize a CFO's office, right? A CFO has 3 main responsibilities. One is a controllership function, which is all about the routine hygiene of your finance and accounting function. Here we're talking about your AP, AR, GL, accounting, books closure, statutory audit, SOX audit, internal audit. All the controls around the finance and accounting hygiene come under the controllership function in the CFO's office. And then there is treasury, which is all about cash management, forex, hedging, managing banking relationships, managing working capital, credit lines, credit policy of customers. All of these things come under the treasury function in the CFO's office. And then finally, somebody needs to keep an eye on the performance of the business. So that is where FP&A comes into play, where through activities like budgeting, forecasting, different kind of financial and commercial analysis, The main role of FP&A is to provide timely and accurate insights to the CFO and other senior business leaders in the company so that they can take prudent financial decisions. That's the main function of FP&A. So it's different from your regular accounting role, with the fact that FP&A is more involved in driving the performance of the business and helping the business teams understand the performance of the business. And we look at a couple of examples today as well. Okay. So what is the difference between the controller world and the FP&A world? So all of us typically start with a classic accounting qualification like a CA, CMA, CPA, ACCA, or any of these accounting qualifications. And when we start our careers, there could be either two things that are happening, right? So one is either we are either a spreadsheet warrior. We're trying to do some VLOOKUPs here and there every now and then, and we have no clue what these reports are and how people are using these reports. The second thing that could possibly happen is our roles could be accounting heavy, right? So we are passing a ton of entries every month, closing books of accounts, chasing deadlines to close the books of accounts. So all of these is typically how we all start our career. But as and when we become senior, when we are trying to look at finance director, VP finance, CFO kind of roles, it's a good mix of both controllership and commercial functions. So that's where we also need to understand the FP&A side of it. So what is the difference between the controllership function and the FP&A function as well? The focus of the controller is to make sure that the compliance is in place, the reporting, the audit, the historical performances, the shareholder reports, the investor relations, all of those things are accounted for correctly and published correctly. Whereas in FP&A, it's a slightly forward-looking function where we're looking at how our next financial year is going to look like, what's the budget, the forecast, should we increase the prices, decrease the prices, all of these things are coming under the FP&A function. It's slightly more forward-looking in terms of the performance management. In terms of stakeholder interaction in the controller world, we'll be interacting largely with the accountants and the auditors, the tax authorities, the regulators. In the FP&A world, we'll be talking to C-suites, business head, cross-functional interaction, a lot of interaction with other cross-functional team members to drive and influence the performance of the business. Technology, in terms of technology, we are largely talking about two types of technology in the controllership function. One is your typical ERP, where you're capturing all the transactions. The other could be a consolidation tool. It could be a OneStream or a Tagetic or Hyperion or all of these kind of tools as well. In terms of FP&A, you're talking about planning tools, budgeting tools, forecasting tools, data analytics tools, right? So here we're talking about tools like, Anaplan, JDocs, Board. It could be your Power BI and different kind of analytics tools as well, where we're trying to kind of build the planning logic in there, the allocation logic in there, and all of the different kind of planning parameters inside the FP&A tool as well. Then budget versus variance analysis. The controller largely functions or other focuses on the historical part of the budget, where we're comparing a budget versus actual performance and seeing what went wrong, right? So we're looking at the historical part of the budget versus actual analysis or the variance analysis in the controller world. Whereas in FP&A, we are looking at what future actions need to be taken. What are the actions that we need to take in order to meet the target, or if there is a shortfall, what do we need to do in terms of pricing adjustments, costing adjustments? Should we hire or should we refrain from hiring? So all of these kind of decisions are taken under the FP&A world. So that's where the budgets are slightly more future looking in terms of FP&A world. So that's a quick difference between the controller world and the FP&A world. So in terms of the focus, the stakeholder interaction, the technology conversations, and how are we treating the budget versus variance analysis. Okay. Now, what are some of the FP&A day-to-day questions? So I want to give you a quick glimpse of how is it like to work in FP&A functions. So these are some of the questions that might come to you on a regular basis in your FP&A day-to-day roles, right? So what is the Q1 target for our department? Again, a question from a business unit head. You might want to understand the performance of his department. What is the target? What is the quarterly breakdown of the target? How do we need to achieve it? So these are the questions that can be answered with your budgeting and forecasting document. How much have we set aside for LinkedIn marketing for the year, and what is the quarterly breakup? Again, a classic question from a marketing director. So FP&A is not just about just plugging in the numbers for the budget, right? So you will always be trying to influence the performance. You'll also be looking at the marketing ROIs, the quarterly breakup. How much should we spend on LinkedIn? How much should we spend on Instagram? What was the historical return on ad spends? You'll do all of this kind of analysis and feed into the marketing director to help them plan the marketing campaigns for the upcoming months. Out of the 50 headcount additions, how many are we planning to hire in Q2? Again, So if you are planning to hire 50 more people in the next financial year, right? The HR needs to understand the phasing of it. Can we hire all the 50 people in one go? Can we hire all the 50 people in Q1, right? So they need to understand a quarterly breakup, and that quarterly breakup has to be in sync with the business. It should not happen that your business is growing slow and you're hiring too many people, or your business is growing fast and you're not hiring enough people, right? So that's where the right balance of phasing is expected from you. Then how much new business do we how much new business do we have to bring in Q4 to cover the shortfall of Q3? So let's say a typical forecasting question, 3 quarters have already passed. The final quarter is the one which is pending. So if at all there is a 10% shortfall in revenue, how can you plug that gap? Either do you have to sell more or you have to increase your prices. So what is that strategy that you will be following for you to kind of cover that shortfall between Q3 and Q4? Okay, so what is the impact on profit if we drop our prices by 8%? Again, a classic scenario planning question where if you drop our prices, then what happens on the margin? If you increase your prices, then what happens on the margin? So all of these are the different scenario plannings that you will have to do, and then feed into the business teams for them to kind of take certain decisions. Again, these are some questions. As an example, I wanted to kind of give you a quick glimpse of how the day-to-day FP&A working looks like. But again, one thing you will observe about these questions is that none of these have anything to do with your accounting rule books, with your accounting standards, or with your IFRS or any of these things. Okay, so that's all history. That's all historical accounting, which the business performance teams don't care. What's your accounting logic is, right? So they want to understand the performance of the business so that they can take decisions and influence the performance in the upcoming quarters. And so that's what your focus will be on FP&A, and that's what differentiates FP&A from your regular finance and accounting roles. Okay. Now, in order to understand FP&A, you can classify all the important activities that FP&A does into three broad buckets. One is budgeting, forecasting, and the third one is management commentaries or management reporting. So budgeting is your annual exercise where it typically starts before the start of the financial year. Let's say if 2027 is the calendar financial year, then most of the companies would start their budgeting exercise from August, September onwards, and they would have the final estimate, the estimated revenue, the estimated cost, and the estimated profit for the next financial year, which is the budget document ready and approved by the board by end of November in most cases. Then comes the forecasting. Forecasting is a regular check of the performance of the business. Most of the companies do either a monthly or a quarterly forecasting, right? So after every month, they look at how the next month is going to look like. Okay, for example, if I completed January, then January plus 11 months of forecast. If I've completed February, then February plus 10 months of forecast. So typically we call it a 2 plus 10 forecast, which is 2 months of actuals and 10 months of forecast. So some companies prefer to do a quarterly forecast and some companies prefer to do a monthly forecast depending on the size, complexity, and the volatility involved in the business. Yeah. And then the third bucket is the management commentaries. At regular intervals, you will be publishing a lot of reports, reporting packs to help the business teams. It could be a business unit head, it could be CEO, it could be CHRO, it could be the plant finance function. So various cross-functional stakeholders are there who will be using your reports and taking certain decisions. And in order to prepare that reporting pack, you will be doing two different kind of activities. One is variance analysis, where you're doing different kind of comparisons versus budget, actual versus forecast, current quarter versus previous quarter, current year versus previous year, all of these different kind of comparisons and trying to understand the business reasons for these variances. And then the second activity is your profitability analysis. Now, profitability analysis is about dissecting the overall company profit and trying to understand where the profit is coming from. For example, if a company is structured business unit wise, then business unit wise profitability becomes important. Some business units will be making high profit, some business units will be making lower profit. Take the example of a bank. For a bank, a branch wise profitability is important because banks operate in branches and every branch needs to be a profitable unit on its own. It's a profit center on its own. So that's where profitability analysis comes into play, where you kind of dissect the business's profitability and trying to understand which subcomponents of the business are doing well and which ones are not, right? So this is largely, you can group all of the activities that happen under FP&A broadly into these three different buckets, yeah, budgeting, forecasting, and management reporting and management commentaries. Okay. So now that you have some understanding of what FP&A activities are and about budgeting, forecasting, and management reporting, let's get started with a quick case study. And in this case study, what we'll do is we'll pick up a small case and we will build an end-to-end revenue budget for a small company. Okay, end-to-end revenue budget for a small company. Let me just quickly share my screen and let's get started. So don't worry, I'll share the file with you. Okay, so focus on the screen. So you don't need to do anything here, but all you need to do is pay 100% attention to make sure that you are able to follow what I'm sharing. I'm slightly going to be fast here. Okay, so focus, and then we'll take questions after the exercise as well. By the way, there will come a point in this case study where I'm going to ask you some questions and I want your responses to be put in the chat box. Okay, so be ready for that. Let's get started. I've taken an example of a B2B services company. Okay, so B2B services company is business to business, where it is catering to other businesses. B2C is business to consumer, where it is selling directly to the consumers or customers. Okay, so here's an example of a B2B services company revenue case study, revenue budget case study. You are working with Infosys as a business finance manager, primarily looking after client contracts and business unit profitability and business unit FP&A. So you're part of one business unit. Infosys is a B2B software company providing software services to various clients. The revenue generated by Infosys is largely split between retainer contracts and projects. Now, retainer contracts are your fixed contracts where either the client is paying you fixed sum of money every month, like $10,000 per month, $5,000 per month, something like that, or it could be time and material. You deploy your engineers at a certain agreed hourly rate and you submit the timesheets and then you bill them. So sometimes it could be 11,000 per month, sometimes it could be 12,000 per month, depending on the time the engineers are spending on it. Then there could be project-wise revenue, which could be a milestone-based, like if it could be a 6-month project, so you bill them either on a monthly basis or on completion of certain milestones as per the contract or the agreed statement of work. You are required to work with a business lead and prepare revenue projections for 2026. Okay. Senior management guidance is to aim for at least 12% revenue growth over 2025. So whenever you start the budgeting exercise, typically the management has certain ideas in mind. So that, okay, we want to grow by 10%, we want to grow by 12%. In this case, the senior management guidance is at 12% revenue growth. Will we be able to achieve 12% revenue growth in the budget? Let's see as and when we progress in the case. Now, assume that you are at the end of 2025. So you are preparing 2026 budget, which means you are at the end of November, December 2025. Okay, you have to think about it from that context and then build your budget. So let's get started. So typically in a budgeting exercise, what happens is that once the management guidelines are ready, you come up with your templates, right? Templates where you will be filling your revenue, and then those templates will again get uploaded in your FP&A tool on your system, right? So here on my template, which is ready. So a quick template where you see, sorry, just give me a second. Yeah, here is my quick template where you see my client, my type of revenue, whether it's a retainer or a project. What is my revenue for 2025? If it's a retainer, then what is a per month retainer? And then from Jan to 26 is something which we will be filling and populating this table. Okay. So once the template is ready, you start your discussion with the business teams, right? Business unit head or general manager or project manager or whoever is the decision maker who has a client facing role, and they can give you some insights on what kind of revenue you can expect in the upcoming financial year. So here I have my discussion notes with the business head. Assume that I've already discussed with the business heads and general managers, and I've captured some notes. What we will do is we will now look at these notes one by one and try and give effect to these notes and populate our revenue budget for 2026. Okay. Okay. So I'll look at each note one by one and then populate that. So just follow along, pay attention here. So Visa will renew its contract for one more year at the same rate. So Visa is paying us $1 million per month. Okay. So I'm just going to take $1 million per month and populate it till December. Okay. So no changes in the contract here. Second, Bank of America contract ends in June 2026, and there is a strong possibility that they may not renew. So Bank of America contract ends June 2026, and there is a strong possibility that they may not renew. So Bank of America is giving us $500,000 per month. The revenue is going to continue till June, and after that, there is a strong probability that they will not renew. Okay. So one second. Yeah. So let me just quickly mark this in red. They will not be renewing. Now, why are they not renewing? It could be that after the 3-year contract, they might be going into an RFP. They want to explore some other vendors. or maybe the relationship is going sour. We don't know. They don't want to continue after June onwards, right? Then the next is IBM has agreed to renew its contract with an escalation of $100,000 per month. So IBM is paying us $1.4 million. Escalation of $100,000 means the new fee will be $1.5 million, and this will continue till the end of December. So they'll be signing a 1-year contract with us. Okay. Then the next one, ExxonMobil has decided to discontinue our services from 2026 onwards. So ExxonMobil, okay, happens to be the largest client in 2025. For some reason, has decided to discontinue our services. Maybe they want to change the agency. Maybe they want to, they are going into an RFP. Maybe they don't like our face anymore, and they've said that if you come in the radius of 5 kilometers, I'm going to shoot you. Whatever might be the reason. So ExxonMobil has decided to discontinue with us. So there will be no revenue from ExxonMobil. Now, this creates two problems, right? So one is we just lost our biggest client, and we have to plug that revenue gap. The second one, the second challenge would be that the people who are working on ExxonMobil, and because services, software services is a people-based industry, typically for every $100 of revenue that you earn, you would be probably spending $40 to $50 on people, right? So what do we do with this large team that was working on ExxonMobil? That's the second problem that will arise once we lose a certain client. Okay, but we'll deal with it. Right now, we are only focusing on the revenue budget. We'll figure out the cost sides later. Then talks with Microsoft. The next point, talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st of March at $3.5 million. So typically what happens in large services contracts is that when you get a soft confirmation from the client that the client is on board, or they are giving you the contract, okay, from that point in time till actually signing the dotted line and commencing the work, there is a lot of time gap. Typically it could take anywhere between 6 to 8 weeks, because the legal team sit on it. There's a lot of back and forth in terms of contractual obligations that you may have to do, and then finally it takes time for you to kind of narrow down and agree or align on the contracts, right? So here we are in November 2025, December 2025, okay, and we are anticipating that Microsoft revenue of $3.5 million per month is going to start from March 2025 onwards. Phew, that's a little bit of relief, right? So we just lost a $6 million client, and we have won a $3.5 million client, which is okay. So I think this is part and parcel of any services business. Okay, so let's come to the next client. L&T has decided for a scope and fee reduction of 20% from April 2026 onwards. So L&T is currently paying us. $1.5 million. Okay, so $1.5 million will continue for. So $1.5 million will continue for up to March, and then they're going for a 20% fee reduction, or 20% fee and scope reduction, okay, which is not necessarily bad, So maybe they don't want the same level of services, So we will deploy lesser number of resources on this particular client. So $1.2 million will continue till the end of the year. Then comes Ministry of Tourism. So let's see what's Ministry of Tourism saying. Ministry of Tourism are planning for a bigger project with roughly $4 million, split equally between April and May, right? So last year, Ministry of Tourism did a small project with us, which is about $1 million. This time they are doing a $4 million project, split equally between April and May. Now, remember, I am sitting in November 2025. So I don't know when this project is going to start. Now, this project is going to start on 1st of April. It's going to start on 7th of April, 15th of April. I don't know. But right now, as per the project manager's estimates, the project is going to be equally divided between April and May, assuming it will start on 1st of April, 2026. Okay, so I'm going to park the $4 million here. Okay, so the management aims to achieve an overall revenue growth of 12% over 2025. So what was my 2025 revenue? Pay attention here. What was my 2025 revenue? 125.8 million. Yeah. And then what is my expected revenue? So the management wants to grow by 20%. Oh, sorry, 12%. Okay. So I need to roughly do $141 million in the next financial year. Okay. So, but I just discussed about all our clients with the project managers. I understood which contracts are going to renew, which contracts are not going to renew. And I am looking at only $87.3 million. So $87.3 million. But the management wants to achieve $141 million. So what can be done here? what is the management thinking? So what needs to be done here? Type your responses in the chat box. Take 30 seconds to think about it. Okay, I see some responses in the chat box. Okay, so company needs new contracts. Okay, we need more clients to achieve the target. Onboarding new clients, new business, or increasing existing business. Increasing existing business is not possible. Okay, so like most of you are correctly pointing it out, you're talking about new business. Okay, now the question is, how do I understood that? Okay, we need to go and hunt for new business. Okay, new business is fine. So, but how do I present it in the Excel sheet? Okay, so that's the question. So there are two ways to present the new business in the Excel sheet. One is I can simply say new business, okay, and take an estimated amount of new business that we are likely to win in the upcoming months or upcoming year, financial year. So that is one way to look at it. A more scientific way to put new business in such cases is, in a typical services business, there'll always be an active new business pipeline. So you can look at a new business pipeline, you can study it, and you can also assign some probability that the probability of winning this client is high, the probability of winning this client is low. Right? So there'll always be new conversations going on. Okay, so typically there will be at any given point in time 10, 15 different kind of client conversations going on. Okay, let's assume that there are about 10 client conversations going on in the new business pipeline. Okay, so in order to plug the gap, what we will do is we will try and go line by line in the new business tracker, okay, and discuss it with the business team and try and capture some probables here. So I'm going to just say client one. I'm going to put a placeholder. So I don't know which client in the new business will be my win, my next win. So I'm going to put some placeholder here and say client win will be a retainer. Okay, and this client win, client one, will be attributed to some of the other client in the pipeline. Okay, let's call it client one for now. Now this, let's say for example, this is Samsung. Yeah. So let's call it client one, and client one is likely to be $2.5 million from April onwards, $2.5 million retainer from April onwards. Now, this is not the only client that will win during the year. Let's say client two, another retainer will come probably from May onwards, let's say at $2 million. Yeah. See, $2 to $2.5 million is not some absurd amount, right? It is based on science. We have been winning clients from 1.5 million to 3.5 million to 2 million, to $6 million as well. So 2 to 2.5 million is an average science client for us. Okay. So where are we now? We are at 125, 800. So like Ministry of Tourism, we can also win some projects. Okay. So let's assume that I'm going to win one project of $2 million in every quarter. Okay. Now, as a placeholder, I'm putting it at the end of every quarter. Okay. So this doesn't mean that this client will come on the 31st of March 2026. Right. So this could come anywhere in Q1. Yeah. It could be a 2-month project, 1-month project, 6-month project. I don't know. Right now, we are just putting in some placeholders basis the past estimates. Okay. Now, we are still short of some money. Okay. We have to look at 12% growth. Maybe let's tweak some numbers here. Maybe let me make this a $3 million client and see where we are. Okay, at 9%. Okay, and maybe let me make these $2.5 million projects instead. I'm playing around with some estimates, right? It's not a final amount. Okay, 11.1%, still lower than 12%. Maybe let's increase these projects to 3 million. Fine. So now I'm at 12.3, $141 million. So at least 12% was the guidance. Now I'm at 12%. So put some placeholders. Now, these placeholders are not some random plugs there. FP&A should not be deciding these placeholders. You will be talking with the business teams, sitting with them and understanding the new business pipeline, and then looking at your probability and capturing some placeholders. Now, let's say, hypothetically speaking, you don't have any clients in the new business pipeline. Then you can't put some random placeholders. Then we don't know what management is smoking. We'll never be able to achieve $141 million in the upcoming financial year. Okay. So there has to be some science to the new business, right? So what you saw, the existing client contract evaluation that we did and captured the money, right? So that is called the confirmed new business or identified new business. And the placeholders that we put here for $54 million, okay, this is called as unidentified new business, which means we don't know where this business is going to come from, but this will come from some client in the pipeline. Okay. This is how typically most services companies will start. Don't think that they will have 100% visibility of their entire budget. No, they will not. Okay. Here in this case, they have 62% visibility of their next year's financial budget or revenue budget. Okay. 38% of the total next year's budget is unidentified new business, which means it is yet to be closed. It will come from some client in the pipeline. Okay. Now, I want you to type your responses in the chat box. Is 38% high or low? What do you think? Type your responses in the chat box. Come on, everybody. 38% of the total next year's budget is unidentified new business. What do you think? Is it high or is it low? High. Some are feeling very high. Okay. Now, most of you are saying that it is high. Okay. Now, the answer to that is, it depends on the context. Now, what is the context? If in the past, you take last 3 years as average budgets, if in the past, historically, you have achieved anywhere between 35 to 40% unidentified new business, then this is not a great number. We know that we will win. All you have to do is win 3 clients, right? And we will achieve 38% unidentified new business. But historically, let's say last 3 years average has been anywhere between 15 to 20% unidentified new business. Then this 38% is high. Then it is your duty to go back and tell to the management saying that, boss, we have never won 38% of new business in the past. Okay. If one of these clients, let's say client 1, for example, is near certain to close, then we can keep 38%. Otherwise, 38% is impossible. It's high. We have never done that before. Okay. So we need more than just a verbal confirmation from the general manager. Can we get a draft contract? Can we get a draft email from client 1 that we are the awarded party or we are the selected vendor for them? Yeah. So we need some soft confirmation. Otherwise, this 38% seems to be too high, in which case you have to go back and influence the management to accept a lower target. So this is quick, building of a budget. So once this budget is ready, there could possibly be a couple of rounds of back and forth when you present it to your senior management. They might say, yeah, maybe 12% is low. So maybe 12% is high. So let's reduce it. Or they might say, no, 12% is easily possible. Maybe client 1 is nearly close. Let's make this 16%, right? So that could also be a possibility. And once after a couple of rounds of back and forth, then you finally agree and submit this as your approved budget or revenue budget for 2026. Quick 30 seconds. While I share this file, quick 30 seconds to see if you have any questions on this case. We'll talk about FP&A and other things later. But if you have any questions on this particular case, feel free to either unmute yourself and share it, or you can also put your questions in the chat box. In the meantime, let me just quickly share this document in the chat box for you to download it. Okay, quick 30 seconds to see if there are any questions on the B2B revenue budget case study that we just saw. Okay, Alex has a question. How do we consider if there was a new client in December 25? It's been assumed that all clients were in place for the whole year. Okay. Let me just quickly open the sheet and understand your question. So typically when you start building your revenue budget, we start with your existing relationships and existing clients. So all the clients that we saw, okay, are your existing clients. So there is already a retainer ongoing with them. Now, we are not saying this visa could have been won sometime in the middle of 2025. That could also be a possibility. Okay. For example, Bank of America contract is ending mid-year, right? It is ending in June 26. We're not saying that all the clients were won on 1st of January 2026. Okay. These clients were won sometime before December 2025. Okay. But they are likely to sign up for the whole of 2026. Now, there could be a possibility that IBM contract might be ending in October, in which case we'll only take till October and then assess whether we want to continue or we want to place November and December as a placeholder or no, depending on how our relationship with IBM is going. Yes. So we are calculating the growth number on the previous year revenue. So previous year revenue was 125,800. Okay. And now in this case, on 125,800, the management wants to achieve a 12% growth. So if this revenue was 100K, then we would have achieved a 12% growth on that. This is the actual revenue for 2025. This is not the annualized revenue for these clients. This is actual revenue for 2025. And the management wants to achieve a 12% growth on actual revenue of 2025. Okay, Vishnu has a question. Management is daring to go for 12 to 14% hike in revenue after they know that they lost the biggest revenue. Yeah, I mean that's a call that the management wants to take. In some cases, see, it also slightly depends on the external environment. So one needs to keep an eye on the external environment. If it's a subdued external environment, let's say we are staring at a upcoming recession, right? Then most of the clients will not spend their money with us. In which case, you have to be conservative. You have to see how do you want to kind of take on a conservative target and achieve it. But if it's a high growth environment, then you can of course aim for bold targets. It all depends on the context, the company, how strong is your new business machinery, how you have achieved it in the past. A lot of things are yeah, at play here. It's not just plugging numbers in the Excel sheet. That's why we completed the revenue budget here in 15 minutes, assuming we had all the data. Typically, when I was working in an advertising agency, the process was exactly the same, and we used to take at least a couple of months to populate the revenue budget, right? And imagine if you have 300 clients, 800 clients, then how would you do it, right? So which means you have to talk to 800 project managers. In which case, typically how the system is followed is you take out the top 50 clients, okay, and maybe do your interactions with the top 50 clients and their project managers to come up with the data one by one, line by line item. And for the other 750 clients, you can just pick up the data from your CRM tool and see if they are able to continue, or just send a template to the sales staff and they will fill the data for that particular 750 clients, and then you just review it and consolidate it. Typically, again, 60-70% of your revenue would be coming from your top 20 clients or top 25 clients. So I'm going to stop sharing my screen. I've also shared the Excel sheet in the chat box. Once you download it, just type done in the chat box. That's for your reference. Yeah, Sami, the presentation has very minimal information. I'll share the recording with you this will go on YouTube, so I'll share the recording with you. You can just quickly refer to that as well. Yeah, so let me just proceed with the next section. Okay, so we saw about budgeting. What we saw was the example on budgeting. Now let's look at forecasting, right? Again, forecasting, we'll look at a quick exercise. So the top table that you see on your slide, this is your budget 2026. Okay, so this is a very simplified version of budget where we have your revenue, cost, and profit. We just saw example of how a revenue budget was filled. Okay, so when you prepare your budget 2026, when are you preparing this? You are preparing this in October, November 2025. Okay, so once this budget is prepared, okay, now what has happened is we are at the end of January 26, inside the financial year now, within the financial year. We're at the end of January 2026. And you will notice that our January actual performance has come out. We've just closed our books. Revenue is at 90K, cost is at 79K, profitability is at 12%. So we actually missed our revenue target by 10K. Okay. So what we typically prepare at the end of January is something called as a 1+11 forecast. What is that? At the end of January, we will reassess all our assumptions for February to December and see if we want to make any changes. Now, in this example that you see on screen, coincidentally, again, I'm repeating, coincidentally, the amounts are exactly the same as budget. Okay. However, at the end of January, you are free to change the February numbers. You could change it to 105, 107, whatever you want to do. Okay. So we talk about the budgeted revenue. When you talk about the budgeted revenue is $1.35 million. Okay. Forecasted revenue is $1.34 million. Okay. Or forecasted revenue for the year 1+11 forecast is $1.34 million. Okay. Now let's proceed a couple of months further. Now the top table that you see here is the same budget file that you saw on the previous sheet. Okay. So now we are at the end of March 2025. Okay. So you will notice that for February and March, we have done well. We have exceeded the budgeted target that we've got. So at the end of March, you will prepare something called as a Q1 forecast, or we'll prepare a 3+9 forecast. So at the end of March, again, I will assess all my assumptions. If required, I'll change this to 105, 107, 115, whatever I want to change, to 90, whatever is the right feeling. Because by March, I would have updated information compared to November 2025. Okay. So I'd have some updated information, so I would change these. Here again, coincidentally, all the numbers are same as budget. You can change it as well. Okay, and you see the denomination is FOR, which means budget. ACT is actuals and BUD is budget. Now, at the end of March, if somebody asks me what is my budgeted number, it does not change. It's an annual exercise, one-time exercise. It is still $1.35 million. But at the end of March, what is my forecasted number? I'm now trending at $1.36 million. Okay, so the budget number doesn't change. It's a one-time activity carried out just before the start of the financial year. But forecasting is something which is an ongoing tracking of the business. That's where you are looking at your 1 plus 9 forecast, or 3 plus 9 forecast, or 1 plus 11 forecast, similar to different kind of things, right? So if I come to June, I'll have 6 months of actual. So I'll prepare a 6 plus 6 forecast. If I'm at the end of September, I'll have 9 months of data. So 9 plus 3 forecast, right? So that's the difference between a budget and a forecast. A classic interview question in FP&A, where they'll ask you what is the difference between a budget and a forecast. You can say budget is an annual financial exercise which is done before the start of the financial year, where typically we estimate our revenue and cost and profitability for the upcoming financial year. Whereas forecast is ongoing tracking of the ongoing performance of the business. We could be doing a monthly or a quarterly forecast depending on the size and complexity of the business. Okay, so I hope you are now able to appreciate the difference between a budget and a forecast. Let's proceed further. So we looked at budgeting, we looked at a revenue budget example, we looked at forecasting and tried to understand the difference between a budget and a forecast. Now we look at variance analysis and profitability, so or a simple management report. Now again, I don't want to spend too much time here within the limited time that we have got. I'm just going to cover one example. So whenever we talk about management reports or commentaries, one thing that comes to our mind is some complex dashboard, some Power BI dashboard with drag and drop buttons and some graphs and here and there, right? So that's not management reporting or business partnering. More the number of dashboards, more the number of graphs is not business partnering. Okay, sometimes less is more. Okay, so I'm going to give you an example here. So here's a quick example of a management report. Okay, so here the actual revenue for 2024 is 35.9 million, and the budgeted revenue for 2025 is 55.3 million. Okay, now how did we get from 35.9 to 55.3? We're using something called as a waterfall chart. Now this is called a waterfall chart, pretty much available in Excel. The waterfall chart simply captures all your positive variances that you see here on green and your negative variances that you see here on red, and tell you how we were able to reach from 35.9 million to 55.3 million. Now, when we are presenting the waterfall chart, a couple of things are important from a good storytelling perspective. One is you start with the action title. What does the action title say? Average price increase of 14% across all categories. Volume growth in cone and cup sales offset by volume dip in sandwich. Okay, you'll see here that all the prices are roughly increasing above 14%. And then there's a quantity volume dip in sandwich that you see here. Okay, so your action title or the narration should be such a way that if people don't see the graph also, they should be able to understand the context. And your graph should be so good that even if there is no narration, they should be able to interpret the graph. Right? That's a best practice of a storytelling. Right? So here what I've done is, typically this kind of a waterfall chart, you can get it from Excel. But I've just went one step ahead to increase the impact of my storytelling. So I've added these manual arrow marks here so that to give them the increase flavor, and then the manual arrow mark here in red to give the decrease indication. And I've also clubbed them into price variance and volume variance separately. Okay, I've not done a one price volume and one volume variance and one price variance and one volume variance. I've tried to group them into all price variances and tried to club them into all volume variances, just to manually added this indicator here. So to give that indication that these are price volumes, these are price variances, and these are volume variances. Again, I just wanted to give you a quick glimpse of how your typical management report looks like. So this is called as a revenue bridge, where you're trying to explain the revenue reconciliation between two endpoints or 2 points. It could be budget versus actuals. It could be current quarter versus previous quarter. It could be budget versus or actuals versus the budget of the next financial year. Any different 2 points, any different points, you can explain the variance with the positives and the negatives through a waterfall chart. Okay, this is a quick example of a management report that I wanted to share with you. All right, so let me just quickly, moving on. So now to sum it up, right? So FP&A will not always be your typical role where you will be dealing with IFRS or any of the accounting rule books, right? It's going to be performance driven, where at regular intervals, you will be collecting a lot of inputs from various cross-functional teams like HR, sales, marketing, production, operations, supply chain, different kind of teams. And then at regular intervals, you will be providing a lot of insights and reports to these various teams. Now, what could be your possible role? Yeah. Again, depending on the size and complexity of the company. So if you're in a very large company, then your role could be something very narrow. You're only looking for after marketing budget. Yeah. If you are with a mid-sized company, then your then you have a full P&L visibility. Okay, and you will be looking at the entire performance of the company. So typically with HR, you will be interacting with to understand the workforce planning, headcount, forecasting, salary adjustments, increments, incentives, benefits, buffer hires. All of these things are something which we'll plan closely with HR. With sales, you'll be talking about revenue forecasting, the quality of pipeline, sales performance metrics, incentives, commissions, salesman commissions, distributor margins. All of these things is what you will be looking at from a sales perspective. With marketing, you'll be looking at marketing ROI analysis, campaign performance. Is Instagram performing better or is LinkedIn performing better for us? Return on ad spends. All of these things is something which we'll be looking at and helping them allocate the marketing budget in a much better way, right? Then with production and operations, you'll be looking at capacity utilization, planning, yield ratios, efficiency ratios, productivity, labor productivity, machine productivity. All of these things are coming under your production and operations. And then finally, with supply chain, you'll be looking at inventory management, working capital optimization, freight cost analysis, make or buy decisions, production forecasting, right? Quantity planning. All of these things are your demand planning. All of these things are your supply chain related issues that you'll be looking at. Okay. So depending on where you are in the company, you would largely be collecting a lot of inputs from these various cross-functional stakeholders and then providing them insights and reports on the performance of the business for them to take certain future decisions. Okay. So that's where your FP&A role is different from your typical accounting role. Okay, now that you understood the difference between the controller world and the FP&A world, we looked at some examples and activities around FP&A. So how do you prepare for your FP&A roles, or how do you transition from your typical accounting, audit, or tax role to your FP&A role? Okay, this is a one straightforward path, but again, I can give you some tips around how you can transition from your role into an FP&A role. So one is try and leverage your sector exposure. For example, let's say you worked in statutory audit for 5 years. Yeah. And during your statutory audit, you have largely audited insurance companies. Then insurance sector is your stronghold. Okay. So try and look for an FP&A role in an insurance company. Why? Because you understand the terminologies. What is an insurance premium? What's the reinsurance premium? What's the claim ratio? You understand the ecosystem, the terminologies of the FP&A role or of the insurance industry. So that is where, if you worked on a particular sector, if you feel you're strong on a particular sector in the accounting function or tax function or whatever, you try and transition into an FP&A role into that kind of a role or that kind of a company or a sector. Study management reports, even when you're not in an FP&A role, and I have done this extensively. So when I was working with a large company, right, so I used to always be curious and try and make friends with other departments and see what kind of reports they are working on, or what kind of performance management reports they are. Like, for example, when I was working with a large company called Bharat Petroleum in India, so I was responsible for industrial fuels, the FP&A for industrial fuels. But I was curious to know how is the gas business functioning, how is the lubricants business functioning. So I was to always make friends with them and then try and understand their reports, their functioning, their challenges, right? So try and study some management reports. Even if it's just passive study, you'll still understand a lot of things about them. Make compliance your bridge. Sometimes all you need is to get out of that audit label or your accounting label, right? So even if you're working with, let's say, a big four firm in an audit function, so try and cross over to the industry side first with whatever role you get, right? Make compliance your bridge. I'm sure there'll be plenty of roles which are on the other side. And trust me, in the industry side, compliance is not your 100% of the role. For example, when I moved over to the other side, or when I started my career in the finance function, right? When I was working with a small or a mid-sized kind of a ad agency of a large global agency in India. So probably I wouldn't even spend 5% to 10% of my time in the statutory audit, SOX audit, or all these things. 90% of it was actually performance management. So even when you cross over to the industry side, most likely you will spend only 50% of your time in compliance. Maybe 50% of your time will be performance management, commercial stuff, right? So make compliance your bridge and move over to the industry side first with whatever role you get. Okay. Then learning Power BI, Tableau, and other data analytics tools would be helpful. Power BI, Tableau, SQL. These are all tools that are typically used in the data analytics function. So again, would learning Power BI guarantee you an FP&A role? No. You have to be conceptually sound with FP&A concepts. And then Power BI will be a strong addition to that. And then create a reason with the qualification. So today there are certifications available in FP&A, right? So create a reason with your qualification, get an FP&A certification. So at least you can say, I'm a certified FP&A professional. I know the concepts. I have worked on certain case studies. Okay. Just that I have not got practical exposure. I've not probably built a budget end to end, but I've seen how a budget looks like. I've seen how a budget is built, right? So get that reason with the qualification as well. Okay. So these are some quick tips on transitioning into FP&A roles. Okay, so let's do a quick recap of what we have come so far. I still need about 5-7 minutes for you to share some things, but let's do a quick recap of what we have come so far. We understood the controller world, how it is focused largely on the compliances bit, and the FP&A world, how it is focused on the performance management, and what is the difference between the controller world and the FP&A world. And then we looked at some key activities in FP&A. We tried to understand what is a budget, and we looked at building a end-to-end revenue budget for a small services company. And then we looked at the forecast. What is the difference between a budget and a forecast? How companies prepare either a monthly forecast or a quarterly forecast. And then we also looked at a management reporting example. Dashboards may not necessarily be management reports. There could be a number of different kind of reports that you might be required to work on from a business partnering perspective. Okay, so that's the key activities in FP&A. And then we looked at some quick tips on how do you transition into FP&A, what reasons you can create to transition into FP&A from your typical accounting, audit, or tax role. Okay, so now that you have some understanding, I have been interacting with CFOs extensively, and there are 5 critical skill sets that CFOs today are looking for in their finance function. So what are those 5 critical skill sets? One is core FP&A concepts: budgeting, forecasting, management reporting, fixed cost, variable cost concept, marginal costing analysis, variance analysis. All of these things are coming under the core FP&A concepts. Then comes financial modeling. Financial modeling specific to FP&A, revenue models, cost models, scenario planning, sensitivity analysis, right? All of these things come under the financial modeling, which is specific to FP&A. Then data storytelling. Again, data storytelling is not just preparation of dashboards, it's storytelling best practices. How do you influence the business teams, with a strong narrative, with a strong graph, when to use what type of a chart or a graph? All of this comes under storytelling best practices. Then comes business partnering. Business partnering is all about your business acumen. It's your ability to build strong cross-functional relationships, work closely with the business teams to help them understand the performance of the business and influence the performance of the business, right? Then leveraging AI and the technological developments that are happening in the FP&A field. It could be implementing AI tools. It could be implementing an FP&A tool out there. It could be analytics tool out there. So trying to understand the technological developments to make your life far more efficient and effective. Right? So these are the 5 critical skill sets that CFOs today are looking for in the finance function. Here are some statistics to support that as well. CXOverse, again, which is a community of more than 1,000 plus CFOs, says that 8 out of 10 CFOs say it is generally difficult to find the right kind of FP&A talent. And I truly agree with this. Whenever I get an inquiry about an FP&A role, it's not about the vacancy. It's always about finding the right kind of talent, right? 8 out of 10 CFOs are really struggling to find the right kind of FP&A talent. Why is this happening? Because FP&A is heavily in demand, and you don't have the right kind of FP&A professionals out there, because everybody is looking for experienced FP&A professionals. And those who are looking for a job, they say we don't have FP&A experience. So that's why I think the certification that I'm going to also talk about, we have created that as a bridge, and we have been able to place many of our students in FP&A as well. Here is some statistics from a salary standpoint. Right? FP&A roles command at least 15 to 30% more salary than regular finance and accounting roles. Again, don't take my word for it. Do your own research. Download the salary survey reports from large recruitment agencies like Michael Page, Robert Half, Hayes, Kingston Stanley, and you will come to know and you can observe that FP&A manager, FP&A analyst, senior analyst kind of roles are commanding at least 15 to 30% higher salary than regular finance and accounting roles. Why? Because they are decision support roles. These are business partnering roles. These are roles which closely work with decision makers and CFOs in the company. Okay, so that's a quick statistic of why you should take FP&A seriously, especially going forward in your career. Okay, so what we have done at FPI is that both Asif, my co-founder Asif, and I have quit our high-paying jobs, and over the last 3 years, we have built a credible certification in FP&A, which is called the Certified Global FP&A Program. It's a global FP&A certification built and delivered directly by CFOs and FP&A leaders, and not by university professors. It has 10 comprehensive modules. We should talk about it in a while. All through experience, simulations, and real-life case studies. Right? Nothing is theory. Everything is through practical case studies. Asif must have worked on 4 or 5 different sectors in his career. I have worked on 4 or 5 different sectors in my career. Plus, we have external faculty and advisory board who kind of help us develop different areas, different sectoral case studies, which are highly practical. You learn them here and you go and implement them right away. You'll be part of a global alumni network. So FP&A program, CGPA program has been taken by students from more than 25 countries so far. More than 300 students have taken this program so far. Get sessions with a personalized career coach to address any questions or any career challenges that you might have. Placement support, again, I'm using the word support and not guarantee. Placement support in terms of helping you with your resume review, your interview preparation. So many times it has happened that students, while undergoing the CGFA program and even after that, have pinged us saying that I have an interview coming up in 2 days. Can we do a quick mock interview? And we have done that. I've even taken interviews at odd hours as well because we had students in the US, in Australia as well. So you also get access to the monthly Q&A sessions where you can clarify any of your doubts directly with the faculty. Access to external speaker sessions. Globally, top FP&A experts, tool providers, automation companies, they come to FPI for guest sessions. We conduct one guest session every month. You get all of this access. And all of this happens through the comfort of your home through seamless access to online LMS. All the lectures are live, conducted on Zoom. Everything is, process oriented. It is shared with you well in advance. All the resources, materials are saved on our best-in-class LMS, which you can log in and access at any time. It's very easy for you to kind of complete it. CGFP program has more than 25 plus real-life case studies, which are bigger case studies. Again, 50 plus smaller examples as well. 10 plus activities, a guided capstone, which is an end-to-end budget presentation, preparation and presentation for a CFO, right? And then you also have data analytics tools like Power BI, Power Query, Python, SQL, Tableau. And then we are also now covering the AI module, which covers all the essential topics like Claude, ChatGPT, Gemini, Manus AI, which is again an agentic AI tool, and then Copilot as well. So again, these tools are not covered randomly. These are covered with FP&A specific use cases, right? So that's where we are covering these tools in the program as well to make you truly a tech-ready, future-ready FP&A professional. Now, what does the CGFP curriculum include? It has 10 exhaustive modules. Again, I'll not spend too much time on this. All the details are available in the brochure. So we start with the introduction to FP&A, what FP&A is, what are the different kind of roles out there. We spend good amount of time on budgeting and forecasting, preparing end-to-end budgets for different kind of companies, different components like revenue budget. What you saw today was just an example of a revenue budget. We saw revenue budget, headcount planning, overheads, SG&A expenses. How do you look at budget from a global perspective and from a regional perspective? All of those things are covered with different examples. Forecasting, your monthly forecasting, your quarterly forecasting, your cash flow report, driver-based planning. So all of these are different kind of concepts that are covered from a budgeting perspective. Incremental budgeting, zero-based budgeting, top-down, bottom-up budgets. Right, those are all covered. So budgeting forecasting is probably the most important module in the program. AI for finance and FP&A, where I already mentioned to you that we cover all the tools with specific FP&A use cases. If you're preparing a forecast in Excel, how do you use AI tools to prepare forecast in Excel? If you're preparing a management report or a CFO presentation, how do you use AI tool to prepare a CFO presentation, right? So we're covering practical use cases in AI for FP&A. Management reporting, again, different kind of management reports, monthly reports, quarterly reports, performance frameworks like KPIs, OKRs, different kind of analysis, variance analysis, profitability analysis. All of these come under the management reporting module, again with practical examples and use cases. Financial modeling specific to FP&A, revenue models, cost models, business model canvas, your scenario planning, sensitivity analysis, your trends and forecasts and trend lines. All of those things are covered specifically from a FP&A standpoint. Again, we don't cover items related to valuation or leverage buyouts and all of that. Those are more investment banking stuff. What we cover is more FP&A specific stuff. Data analytics, we are covering all the data analytics tools. See, one thing that is common in your FP&A role is that you will be dealing with large chunks of data, large sets of data. And you need to know how do you navigate through these large sets of data. So that is where you're covering all the data analytics tools like Power BI, Power Query, Tableau, SQL. All of that is covered in the data analytics module. Again, we don't claim to make you an expert data analyst, right? So at least we take you to a level where you're comfortable to use these tools in your day-to-day FP&A function. Right? At least understand how these tools are a replacement for an Excel. Financial analysis. Financial analysis is not just about ratio analysis. There are a number of different kind of financial analysis that you do from an internal perspective, from a CFO perspective, from a head of FP&A perspective. That's your pricing analysis, your price volume mix, your horizontal analysis, vertical analysis, different kind of profitability analysis, right? Your recharges, your allocations. So all of these come under the financial analysis module. Then comes your storytelling and presentations. Again, like I mentioned to you, you are comfortable with analyzing 10,000 lines of Excel sheet, but your business teams are not. So that's where we're covering all the storytelling and presentation best practices. How do you prepare a presentation? How do you prepare a CFO presentation? How many slides to use? What slides to use? What chart types to use? What graph to use at what point in time? All of that is exhaustively covered in the storytelling and presentations module. Strategy again is an interestingly positioned module where we are, as and when you start becoming senior in your finance roles, your senior management will start talking a certain strategic language. At that point in time, you cannot use strategy in a very loose way. So that's where we're covering all the popular strategic frameworks and also show you how strategy is interconnected with FP&A with practical examples, right? And then business partnering. Business partnering, again, we are showing you 7 to 8 practical examples of how Asif and I in our careers have coordinated with HR teams, with business development, with pricing teams, with tax teams for that matter. So there are so many different kind of teams with HR teams, with plant finance. Right? So different teams that we have coordinated and how we were able to truly add value to these cross-functional team members. Right? So that's what business partnering is. So all in all, 10 solid modules. Again, don't think about CGFPA as a course or a certificate that you will be taking. It's 20 years of our blood, sweat, and tears packed into a compact 6-month program. Typically, the stuff that we teach you in the CGFPA program, it will at least take you 5 to 10 years of FP&A experience to learn all of that. So here we are kind of trying to fast track the experiential learning in 6 months. So that's the CGFPA program for you. Okay. So now, what is and how do we do it? Like it's a proper coordinated, again, we are at batch 10 now. So this is much more refined program now, right? So more than 300 students have already taken the program, right? So we start in the next batch is starting in September. That's when the orientation starts. The classes are actually starting from the second week of October. That's when we start covering all the core modules. So this is the core modules tracks that will happen on Saturday from 6 p.m. to 8 p.m. IST. You see the Saturdays from 6 p.m. to 8 p.m. IST. So 2 hours of live lecture for the core modules. And then on Sundays from 6 p.m. to 8 p.m. IST will be the tool track where you're covering Tableau, Power BI, Advanced Excel, SQL, Python, all of that will be covered in the Sunday tool track, which will happen from 6 p.m. to 8 p.m. IST. Structured 6-month program, to just trust the process and you will completely come out transformed in FP&A after the 6-month program. Now, what is the eligibility criteria? You need to have a minimum of bachelor's degree or a global equivalent in finance, accounting, or business. Alternatively, you may have your professional qualifications like a CA, CMA, CPA, ACCA, or any respective accounting qualification of your country. Okay. And again, we don't claim to be a substitute for all these programs. In fact, we are a supplement for all these programs because they don't necessarily teach FP&A in all these programs, right? So it's more experiential learning. How will you get your CGFP award? 3 things. One is you need to attend at least 50% of the classes live. That's compulsory. At least you need to have 50% attendance. And then you finally submit your capstone. Now, this is an optional capstone, but it's a recommended capstone where somewhere in month number 5 or 6, you will be working on your capstone project and you submit it. And then you'll be eligible for the final examination. The final examination is a multiple choice question style, 50 questions, 100 marks. Okay, 2 hours proctored examination. It's a live proctored examination that happens on our examination tool on a third-party platform where we monitor. An actual proctor monitors your live exam. And then once you pass that examination with minimum 50% passing marks, then you get the CGFPA certificate from FP&A Professionals Institute. Okay, so we are an autonomous body registered in the UAE at this point in time. Okay. Now, what is the investment? The ROI for a program like this, I leave it to your imagination, which can easily fast track your career by a few years. The course fee investment in this program is USD 1795. You also have an option to pay it over 5 months. Typically, there are some early bird offers running on it every now and then. So once you kind of fill in your application, the academic counselors will reach out to you. I don't know what's the current offer, so the academic counselors manage it. So they will reach out to you with your application process. It's a 6-month live session, right? And sometimes we may ask you to go through some recorded videos as a pre-reading material for you to go through and come back. So totally about 5 to 6 hours of your weekly commitment is required. 4 hours in the live class, 2 hours on Saturdays and Sundays. And then about 60 to 90 minutes of your own time investment to go through the pre-reading material. Sometimes we might give you some videos or a case study to read through and then come to the classroom. The orientation for the next cohort 10, is starting on 12th of September 2026. Okay, when the live sessions will start on Saturdays and Sundays. The first round of applications for the cohort 10 have already started. The deadline for the first round of applications is 31st of August 2026. What I would recommend all of you to do is at least complete the application, which is completely free of cost. Once you complete the application, our academic counselors will look at your profile. They will determine your eligibility. They will reach out to you. You can also ask them for demo lectures. You can also ask them for any previous alumni phone numbers that you want to verify, right? So do your own due diligence. Don't just take this course because I'm telling you. Do your own due diligence. And there have been tons of testimonials as well. We have been able to place a lot of our students in various companies as well. Many of them have been able to find a lot of jobs, a lot of FP&A jobs as well. Many of them have been able to implement a lot of frameworks that they have learned in their FP&A roles, in their existing companies, in their existing roles as well, right? So again, there are tons and tons of testimonials. You can talk to any of our alumni across geographies. There are alumni in India, in the Middle East, in the US, in Australia. Feel free to talk to any of our alumni and they'll tell you how the program has been for them. FPNAjobs.com is our initiative where we're trying to bring the recruiters and the candidates on one single platform. Do sign up on FPNAjobs.com and create a detailed profile on FPNAjobs.com. This is completely free of cost, irrespective of whether you enroll into the program or no. This is where we keep posting our jobs regularly that come from our circle. Again, a quick reminder, the first round of applications are closing on 31st of August 2026. That's when the CGFP application, the first round of applications are closing. Feel free to kind of complete the application and be in the race for all the early bird offers or anything that is going on at that point in time. Awesome. Very best, guys. All the very best, guys, to all of you in your finance careers. And I'll hopefully see you in one of our programs. Keep learning, keep growing, keep both FP&A and AI as a priority in 2026 because automation is coming for rule-based work first, right? So we are moving towards roles which are analysis oriented, business partnering oriented, and which has a lot of human interaction. So make sure that you try and pivot your finance career towards that as soon as possible. Okay. All the best, and I'll see you all again.